Welcome to the Treasury Update Podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome to the Treasury Update Podcast, first episode in the Payment Primer series. This series covers the important and foundational aspects of payment systems. We'll discuss a variety of payment rails, both old, new, and soon to be here. It will include some structural concepts needed for anyone new to payments and dig into some of the important elements about payments in a way that should prove useful for highly experienced payment professionals. This series will feature interviews with Strategic Treasurer staff along with a wide range of payment professionals from many banks, payment processors, and others in the payment space. I'm Jonathan, Media Production Specialist here at Strategic Treasurer, and I'll be your host for this episode. This episode is titled Low Value Payments, Automated Clearinghouse, and we'll be covering foundations in ACH. This is about the low value payment systems in the US, which is used for direct deposit of payroll, business to consumer, business to business, and other payment types. Joining us today is Craig Jeffrey, our managing partner, to kick off this initial discussion. Welcome to the Treasury Update Podcast, Craig.
I'm glad we're doing this series. Thanks for having me on for the inaugural one.
Of course. So what is an ACH, and is that different than Nacha?
ACH is different than Nacha. Nacha is a rulemaking body, a governing body for automated clearinghouse payments, low-value payments done in the U.S. You think of low-value payments, high-value payments in the U.S., one of the most popular methods for low-value payments is the ACH network for automated clearinghouse transactions. Those are entries like you would describe before, direct deposit of payroll, consumer debits where you're funding some bill or expense, as well as corporate to corporate and some different conversion activities for payments. So ACH, think of that as the payment rail or the payment type, and think of the phrase Nacha as the association that provides the rules and some of the operating guidelines for that. The other factor that's part of that, John, is payment associations, and there's certainly a number of payment associations, far less now than there was 20 or 30 years ago. There used to be about one payment association per state. And so for those in the U.S., you know how we love our states, and those in other countries look and say, why would you have so many different payment associations? I think it's down to 9 different payment associations. Their responsibilities are compliance. They usually have services like performing audits for banks and other originators. They have education, resources. They put out training programs, oftentimes certifications, and they do a number of steps to support payment security. So they really help the overall group and the associations. ePay out of Texas, EPCOR of Missouri, NEACH or NEACH out of Massachusetts, Payments First out of Maryland, and out of Iowa, the group is called, and you will not believe it, it's called Shazam. And the Southern Financial Exchange is headquartered out of Louisiana. The Clearinghouse, or TCH, is North Carolina-based. UMacha is out of Minnesota. And WestPay is out of California.
Pretty interesting names there.
Yeah, which name would you want to go with? I mean, Iowa's like, we're in the middle of the country. We want to have a really recognizable name, so we'll call it Shazam.
Well, it sounds quick. So most central banks run payment rails. Does the Fed run Nacha?
John, the first part of your lead-in was exactly right. Most central banks run the different payment rails. And that certainly makes sense that if you're going to be settling between 2 different banks, use the central bank to manage those payments. That makes a tremendous amount of sense. And that is far and away, almost exclusively how it is done across the world. But the U.S. is a little different. In the U.S., there are 2 ACH operators. One is Fed ACH, and that's operated by the Federal Reserve, the central bank of the U.S. The second one is the Electronics Payments Network, or EPN, and that is managed by the Clearinghouse. And the Clearinghouse is owned by a number of banks. So that's how those work. Those 2 different methods of handling the same type of transactions, governed by the same rules, using the same protocols and formats.
So how do you choose one or the other, Fed ACH or the EPN?
Well, a bank would make that decision, which one they're going to use, and that could be a variety of factors in terms of, are you a member of the EPN and do you own it? You might want to route more of your transactions through that. You might get a better price, or you might use Fed ACH exclusively. but there's no requirements to only use one. So quite a few banks run their transactions through both networks, have both available for them to use. So why would you keep two? And I'll give you an example from yesteryear. Backup and contingency is always good. And so having access to two works well. So certainly all the largest banks, the $1 trillion banks and the extremely large banks, it's good to have an extra backup method for settling. If you think back to 9/11, when planes stopped flying in the U.S. after the attack, they would clear checks physically. Checks would be put onto planes, usually private planes. They'd fly from major cities to major cities all day, every day, or so frequently. There's all these batch runs of checks going around. When planes couldn't fly, everybody had these checks, and their method of clearing was largely through flying checks around. So what did they do? They used the alternative method. Instead of directly sending them to the other party, is they dumped them on the Fed. The Fed would be the way to clear the checks, and they would provide clearing and process these based upon their schedule. And of course, the Fed didn't like that. It was a huge amount of influx of checks, but it provided a way for the economy and payments to flow quickly and to flow rapidly. So having a backup makes sense for many banks.
Okay. Let's get into some of the terms and acronyms of ACH. Could you go through a few of your top terms and acronyms here?
Every area, every industry has certain terms, and payments there's a number of specific acronyms and terms that are used. So too, as you dive into ACH more deeply, there's a couple terms. There's a few items that matter most. The term originator, receiver, and ODFI and RDFI. So originator and receiver, and ODFI stands for originating depository financial institution, and RDFI is receiving depository financial institution. So that means, let's say my company sends money to your company. So I would be the originator. My bank would be the originating depository financial institution, or the bank that the ACH transaction starts out in. Your bank would be the receiving depository financial institution, and you would be the receiver. And so whether I'm initiating a transaction to send you money, or if I'm originating a transaction to pull money from you, I would be the originator, you would be the receiver. Your bank would always be the receiving depository financial institution to receive those instructions, and mine would be the originating depository financial institution. The next set of terms is really important to understand because it's very different from other uses of the term debit and credit. So an ACH debit and an ACH credit are different than what you may think. But let's go through those. This may break your brain because we're doing it audibly. If we wrote more of it down, it may be a little bit easier, but stick with me if you will. Whether it's an ACH debit or an ACH credit, I would just point you back to what I had said about originator and receiver. So a transaction is either an ACH debit or an ACH credit based on what the originator is doing. It's not based on the receiver. If the originator is getting money into their account, it's an ACH debit. If they're sending money out of their account, it's an ACH credit. That's the type of transaction. Both originator and receiver would call that transaction an ACH debit or an ACH credit. The other thing is banks will oftentimes use the term debit and credit differently as well. When a bank issues you a credit, that means in banking terms that you have more money in your account. And the reason you have more money in your account, why they call it a credit, is your account is a liability on their side. And so giving you money means they've increased their liability, what they owe you. And so that's how they would refer to it. So on the accounting side, so as a company, we would record an increase in cash as a debit, a decrease in cash as a credit, because that's an asset account. Asset accounts have a balance on the left-hand side or the debit side. Credit would be, if you credit an asset account, it would decrease it. So from a company perspective, cash is an asset account. If I initiate an ACH debit, I'm going to be pulling money into my account, and I will debit my cash account ultimately. It's not correlated to that. If I am going to be decreasing my account, I will be crediting my cash account. So when I send an ACH credit, I'm sending money away. As the originator on my cash books, I will be crediting the account because I'm reducing that. On the recipient side, an ACH credit to them will be a debit to their account because their cash balance will go up, but the bank will say you received a credit because it's a liability on their account. So, do you know what I said in the beginning about breaking people's brains? Did I break your brain?
Nope, makes sense.
It makes sense. Awesome. That is very good. Well, the next thing, John, is another term is formats and standard entry class, or SEC. This is just helpful to know, especially if you're talking to the ACH experts at the bank, and maybe that's about it. A Nacha format is a format. It's a file format. The different standard entry class entries and the codes, those codes are used within the format, and there's some variability and variation within that. So a CCD, a CCD plus, CTX, PPD, these are different standard entry classes. It uses the same format, but there's different variations on what's in the format. If you go and look at the file formats, the individual record formats, you'll see where there's similarity and where there might be some variance with them. There's a Nacha format, and then there's different standard entry class options, so different variations. The other thing that people should know is settlement date. Settlement date is what's placed in the batch record that says if I'm sending payments out, let's say it's payroll's Friday and it's Tuesday, and I send it to the bank, the settlement date is designated as Friday. That will be the date that money settles or moves into those accounts, the employees' accounts, and hopefully it would be the same time that money comes out of your account as the corporation.
Okay, so a lot of terms. Why would you use an ACH over other formats?
Yeah, or a different payment rail. So ACH is really popular. It's low cost. It's very efficient. That tends to be like one of the biggest reasons. And you can use that to convert other payment formats that are less efficient, like, checks. You can convert them to ACH as well. So low cost and efficient. Those are some of the top reasons.
And how is Nacha addressing security concerns?
Well, there's quite a few things that Nacha is doing. A couple of them. First, Nacha has various standards that they put forth. And so as we look at different payment rails, more and more, we're seeing payment rails enacting standards to protect the entire payment rail, the entire environment. Let me mention just a few of the things that they're doing. One is limited access to the network. People just freely can't originate transactions into the ACH network. They have to go through a company or through a party who can originate those. And so there's certainly ways to get things into the network that are false or incorrect, but it's very limited access to the network. Someone has to be approved by the bank, and there's a whole risk management protocol that occurs to do that. And risk management is important, and you can see and watch that continue to grow and escalate in importance. That's one. Another one that's worth noting is that high volume processors, people that are doing many, many ACHs, have a higher level of care and standard to protect the bank account information. So they have to either mask it, encrypt it, or tokenize banking information once you reach a certain volume. And so if someone were to steal all the data, now they've got a token, or it's fully encrypted, or it's unusable. And so that's a key way for like high volume processors to protect the data and to protect the overall system. Those are a couple of the ways that that Nacha is working to improve security.
And what's the timing look like for ACH payments?
Yeah, so ACH payments, usually ACH payments are done on a prior day or a 2-day basis. So if I originate an ACH file today, it normally is done so it settles tomorrow. You may send them a couple days ahead of time, but it's usually future dated. There is certainly an opportunity to have faster payments than that. So there's an option called same-day ACH, and there's multiple windows during the day when these ACH transactions can be sent through your bank, for example, that will clear on the same day. So there's certain windows of time when it'll hit the first window or the second window or the third window. These are not immediate payments. We would define immediate payments as happening within 10 or 20 seconds from initiation to final settlement. But they are, quite current. They're happening within the same day. And so that's how Nacha has sped up the process to be able to allow them to use an existing long-term network with a set of rules to be able to handle that more quickly.
And the final question is on the formats. You mentioned the Nacha format and SEC codes. Can you explain those?
Yeah, so if you're following along looking at a file format, I'll try to explain it in a way that you can do that. But if not, I'll still try to explain it conceptually. Think of 4 layers. There's a file, batch or batches, individual records, and then potentially addenda records. So file, batch, record, and addenda. So a file is what you can use to send a single batch of, let's say, payroll for a particular day, or it could include a number of batches. Let's say AP files with 3 settlement dates. Those could be included in a single batch that goes to the bank. So the batch is broken out by single standard entry class, same settlement account, whatever account you're charging or receiving funds into, and the same transaction date. The record would be the individual counterparty, your employees, the AP, your vendor that you're paying, or somebody that perhaps you're debiting for paying for a monthly fee on something. So that'd be the record. And individual record can contain a transaction almost up to $100 million. A penny short of that, it's $99,999,999.99 is the most that you can put in an individual record for most transactions. There's lower limits for others. An addenda record will allow you to put information in the addenda field. These are 80 characters in length. This could be, what invoices are you paying for? Could be contact information. And there could be 1, 2, 3, many records. If a file is like a CCD plus or a PPD plus, a corporate payment or an individual payment, that plus indicates a single record. One format that allows many records would be CTX, Corporate Trade Exchange. And you put just under 10,000 records in there if you're paying so many invoices you want to include information. So again, file, batch, record, and addenda. And then there's file header, file trailer or footer, batch header, batch footer, batch trailer, and then there's individual transactions and the addenda. So 4 levels.
For everybody who is listening that says, this is really interesting, I want to learn more, where can they see that?
I don't know if anybody's going to listen to that and find that really interesting. Unless you're following along on the chart, that might be easier. Yeah, where can you go for more information? Nacha.org is a good starting point. I'd also look at the Clearinghouse, and we may put a few more links in the show notes for where you can go to get more information.
Great. Well, thanks for sharing, and thanks for listening to our first episode in the Payment Primer series.
You've reached the end of another episode of the Treasury Update Podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.